move on into our today's trading idea. The first one would be hibiscus. So one of the reason why we highlight it, we know hibiscus, which one of the pure oil play brand, has been trading higher over the past few days, and finally we're seeing some move on the hibiscus petroleum. One thing that keep the ongoing momentum remain intact, or the trend stay pretty much intact, is see the stock is continue to form a new high low structure since July last year, and the recent decline was pretty much kept within at 200-day moving average and the Fibonacci level of 61.8. So yesterday again, on the back of quite high trading volume, we've seen a breakout move from the we call that short-term downtrend line. So this actually could kickstart a new upcycle. The momentum, if you look on RSI, is quite supportive. RSI now has built a new baseline above their long-term average, while MACD has started to enter their above the zero level, indicating the uptrend is set to continue. So we expect the upcycle to continue unfolding further with the next technical resistance at 2.78 and 2.99, while the cut loss will be below 248. In terms of risk to ratio, is quite attractive with 5.7% downside risk and 13.7% upside potential. For quant score, we are using based on a value style. The scoring is about 6.8. Now, moving into second stock will be price presentation. Now, this what be interesting, because if you look on the far more bigger picture, I think since May 2022, you are seeing what we call that quite a decent reaction for the stock, as the uptrend began on September last year. It actually has traded above the so-called major resistance, which is now turning support. Resistance zone set between 1.39 ringgit all the way to 1.45. This level has been tested number of times, and we think this level is quite critical. So as the stock traded higher, it was retesting those level again twice at least over the past few months, and this level continue to hold very well. Now, there are some concern, particularly when you saw this could be lead into what we call that head and shoulder kind of pattern, but right now the pattern is not completed, and I do think that the what we call that there's no significant reversal signal for now, because in the appearance of the another so-called hidden bullish diverging between RSI and the stock price. So because of this signal, as the stock continue to rebound off the 50-day moving average yesterday, again on the back of high trading volume, a small gap up move above the 20-day moving average give you indication that the uptrend set to continue. The move could be more gradual, but we think uptrend is still quite strong at this current level. So risk level is about cut loss level will be 1.39, with the next technical resistance will be at 1.60 and 1.74. Risk to ratio about downside 6.4%, upside potential about 16.4%, which is quite attractive. Last but not least, we have Pentec Group holding. So the stock is pretty much traded remain on the uptrend since July back in 2022. We've seen numbers of the consolidation, and the stock is continue to trade higher, and we've seen a similar pattern again as per last few weeks. The recent decline again was kept within 50-day moving average, and that is to give you an indication that the stock continue to form higher structure over the past few months or years. So yesterday again on the back of high trading volume, momentum is actually has a strong breakout move on RSI over here, traded above its long-term average line and its short-term downtrend move. So MACD also traded in the positive territory, so we're expecting the uptrend to continue. The pace could be more gradual, but uptrend is likely to continue with the net resistance at 1.05 ringgit and 1.15 ringgit. Cut loss is actually we set at 91 cents. Risk to reward ratio is quite attractive with 3.9, which means you are risking about 5.2% with the potential reward of 20%. Hey!